Hello traders, Gary Wagner here. It is 10:51 in Honolulu, 4:51 in New York on Monday, 14th day of August 2023, and this is the Daily Report for Gold and Silver. Gold prices continue to decline after the dramatic drop last week. Most active contract December gold is down $7.30 and currently fixed at $1,939.30. The first chart we are looking at is a weekly candlestick chart of gold. We can see that although it is only Monday, we have seen gold trade to a lower low on the week than the previous week, and last week we had a dramatic decline. The question is this: I have drawn in two trend lines, an upper level resistance trend line here and a lower level support trend line here. And the lower level support is basically fixed on this low right here, and then again on this low right here. And as you can see, when we project it forward, the low today eloquently matches to the bottom of this trend line. I have converted our weekly candlestick chart to a daily candlestick chart to better illustrate the trend lines we just spoke about and the fact that gold is currently exhibiting a compressing range, forming a compression triangle. When we look at these bottoms, this first one here in March, then to this one here at the end of June, this one here at the beginning of August, you can see that today is where we hit the low that matches the bottom of this support trend line, which beckons the following question: whether or not gold will in fact find short-term support and begin to trade off of this, moving higher, or break through this. And if it does break through this trend line, we would look for major support to come in between 1906 and 1888. The other scenario is if gold holds this particular support level based on this lower level support trend line and move higher. If it does, it has multiple areas where technical resistance could occur. The first point is the 50-day moving average at 1953, the 100-day moving average at 1976, and finally, this descending trend line that is acting to indicate current resistance. The dollar was completely responsible for the decline in both gold and silver, with the dollar currently up 0.33% and the index fixed at 103.03. The dollar continues to show absolute strength. This first chart is a weekly candlestick chart of the dollar index. We can see that after falling to 89.45, it rose as high as 114 and then dropped until it had a 61.8% fib retracement at 99 on the dollar index itself. For the last consecutive 5 weeks, we have seen the dollar index move higher and break above this trend line that is created simply from 2 points. The first point is right here, that high. And the second high, of course, is at 114 right here. If the dollar continues to move higher, it has no technical resistance until this top here, and that comes in just above 105 and 105.82. When we convert our weekly dollar index chart into a daily, one thing pops out at me, and that is today's intraday high and how the dollar index traded to its 200-day simple moving average before finding resistance. So this is our short-term resistance area marked by the 200-day moving average. Lastly, silver also declined 0.43%, or a total of 10 cents on the day, taking it to a lower low than it has seen since it began to drop at $25.50. Currently, we have the most active September contract of silver at $22.64.5. This first chart is a weekly candlestick chart of silver futures. We can see that over the last 4 consecutive weeks, silver has been on a strong correction. beginning at approximately this top at 25.50, which began the corrective period. This week, of course, is only Monday, and as I pointed out when we looked at opening prices, it has already traded to a lower low than last week's low and closed below the closing price of last week, which takes us to our current analysis, which requires the use of a daily chart that I have just put up. We can see that last week on Tuesday, silver prices broke below not only the 200-day moving average, but this long-standing former support line drawn from this low here, and then again at this low here, and we had the lowest low since the correction began at 25.50, which to me signals the strong potential on a technical basis of lower pricing in silver. If that is the case, major support cannot be seen until $22.15, and that is based upon this low here that came in about the third week of June. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.